So the S&P has been trading in a range for 4 days now. The range on the 23rd, the high at 53.68 and a quarter, the low at 52.73. If we were just to draw a line across the top and bottom of those wicks, we have traded inside that range every day this week. So when I take a look at the resistance at about 52.98 on the S&P and at about 52.78 right there, so just below 5,300 and just below 5280, a major and minor psychological level, we're just going back and forth. And when you think about Friday's 8:30 a.m. PCE, it kind of makes sense as far as why we might be stuck in this range, because other than non-farm payroll, and I would argue that PCE in terms of what the Federal Reserve is going to do next with rates would be even more important. So here's the thing. Kind of a guillotine syndrome. Who wants to stick their neck out? Who wants to be a buyer at a higher high? And who wants to be short at a lower low? It would not surprise me in the least to see Thursday's session stuck inside this range. And again, keep an eye on this candle here from the 23rd for what seems to be framing out the week. 5,300 doesn't seem to be in play, and really 5,400 is not in play either. We're just chopping below 53 and 52.80. That's a pretty tight range. All right, so then what does that mean for us going into tomorrow, into Thursday? I would anticipate more chop until we get to Friday's 8:30 PCE, because at that point we'll get that inflation metric that is the pet, that is the favorite of the Federal Reserve. It's the one they use in their models. So if we are going to escape this range, chances are Friday's data, that hot zone at 8:30 a.m. is going to be the catalyst. All right, so that's not the whole story, is it? I mean, are we going to reduce everything to the S&P? No, let's take a look at our other indices here. Take a look at the NASDAQ. A little bit more favoring movement higher. And this makes sense because if you think about the weighting of the NASDAQ, mostly what? Tech, communications, consumer discretionary, and semiconductors. 2 out of 4 of those are the leading sectors month to date. What I mean is, if we take a look at month to date, those high concentration weighted important sectors that are weighted in the indices, SMH and XLK are the number 1 and number 2. So that's 2 of the cylinders, if you will, of this motor called the NAS. So the NAS isn't quite as bearish when we take a look at the range. And again, this has a lot to do with what we're seeing in SMH. So if you're bullish, why not be bullish in those sectors that are already leading the charge higher? Because there's 2 psychologies on Friday. One was the PCE that we just mentioned, or is. The other is the end of month. So when we think about end of month, there is that decision where we have to step back and say, hey, for our portfolios and for traders managing hundreds and hundreds of millions of dollars, they're going to say, look, what do we want to take profit in at the end of May, or what do we think can continue to keep moving? And that's really where SMH and XLK have to be near the top of the list. Now, in terms of the individual stocks within these two sectors are not equal in their tradability. Meaning, if you look at the option chain on XLK, it's crickets and tumbleweeds. So the best way to look at XLK is through the lens or through the symbols of Apple, Microsoft, and yes, NVIDIA. So if we're going to trade XLK, the long position in Apple would definitely be one that I would continue to focus on. In fact, in the Sector Secrets Mastery, we're already long Apple. We scaled out once, and we're looking for more follow through to about 193.60, 193.50. So that's where that resistance is waiting at the price movement range, or that gold zone on this chart. If we take a look at the SMH, please don't reduce everything about semiconductors to either NVIDIA or SMCI. I know they're popular, but what happens is when we get this kind of tunnel vision to 2 symbols that tend to be rotating in the headlines, we miss out on symbols like Qualcomm. So here's our timing on Qualcomm. I would love to be long Qualcomm. In fact, one of the best trades of May was buying a move into the price movement range on the daily time frame and then watching it for about the next 7 days quadruple in value. taking a $4 option to about $16. Well, how does that happen again? It happens when we sink back down into the range. But if we take a look at what's happening on Qualcomm, and this is such an important part of timing, we have the dividend coming out tomorrow. So you can see there, the 30th, 85-cent dividend. I'm going to look for at least about 85 cents worth of weakness. And what I'd like to see on Qualcomm is this green candle get into the gray zone. That's what we did last time. That's what we want to do again. So why not use the catalyst of dividends, which tend to be reacted this way? Prices tend to want to rally into the dividend, and then when the dividend is released, tomorrow, the 30th, it'll pull back, and that's really going to be ideally the timing for this. The challenge is we could get an entry on Qualcomm, but then we still have to navigate through the volatility of the PCE, which means if we do something in Qualcomm tomorrow, I might look for one of two things: a more aggressive level to scale out, pay myself, reduce risk, move the stop to break even, and or just hit the eject button, my time-based exit, if I don't want to deal with what's going to happen 8:30 Friday morning. So if we're going to continue to see chop, I hope you can see that I favor the long side of the NASDAQ. The S&P is likely to stay exactly where it is. So please don't get too froggy at the top of the range, and don't get too bearish at the bottom. We're absolutely still stuck in that range from May 23. And this is my game plan for the next day going into Thursday. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.